Hi there, this is Rob, and this is the 2-minute overnight overview for Thursday. I have a lot to discuss today, so let's get to it. Here's the odd sheet as it stood near the close on Wednesday. The first thing that stands out is the bullish odds suggested by the NASDAQ 100 index securities. You can see these highlighted in green, but they were not confirmed by the other indices. ES, in fact, showed moderately bearish odds, as did SPY, and the Edge Finder identified 3 studies yesterday afternoon, all of which were bearish. So we had a fair amount of evidence suggesting ES could gap lower on Thursday, but the gap up percent wasn't quite low enough, and the conflicting evidence provided by the NASDAQ 100 put the nail in the coffin of any idea to go short, so I did not take an overnight position. Let's take a look and see how the night played out. After settling at 1534 and a quarter, ES wiggled around much of the night, but then posted a little rally after 8 a.m. At the 9:30 open, ES gapped up 3.5 points. Most interesting about tomorrow is that it's an employment day. The release of the employment report comes 1 hour before the equity markets open, and the report tends to have a larger impact on the open than any other economic report. This adds volatility to the open and also additional risk for overnight traders. To demonstrate this, I ran 2 reports. The first one looks at buying and holding overnight any day. ES closes above its 200-day moving average, and tomorrow is not an employment day. The numbers to focus on here are the average winning and average losing trade. As you can see, the average winning trade has seen a gap up of about 4 points. The average losing trade has seen a gap down of about 4.25 points. But let's see what happens on employment days during uptrends. Here we see that the average winning trade is now 6.25 points, and the average losing trade is now 6.75 points. That's roughly equates to a 50% increase in volatility both to the upside and the downside. Traders need to take this into account when considering overnight positions. They could reduce position size, use larger stops, exit before the employment report, or use any other number of management techniques to help mitigate the extra risk. One last note about employment days can be seen in looking at the trades list. The last 7 employment days, going back to August 2012, have all started with a gap up. That's an interesting recent tendency and the longest such run of the period tested going back to 2000. Thanks for listening, and rest easy.